Going. All yours, Scott.
All right, awesome. Hey, well, good morning, everyone. My name is Scott Rogowski. I'm the director of the Northern California Finance Center, Northern California SBDC Finance Center. This is our CARES update, really brought to you around loans, the loans that are being offered to small businesses, yourself and some nonprofits. This is our Monday, Wednesday, Friday CARES update from 10:30 to 12, where we answer live Q&A. And yeah, today is session 31. We've done 31 of these. Well, after today, we'll do 31. And today is June 17th. And we are all in this together. All right, so quick introduction for those of you that don't know who we are. We're the SBDC, that means Small Business Development Centers. We are supported by SBA, Small Business Administration. We have the local SBA District Office of San Francisco on the phone. We have Noah Brode, who unfortunately we only get to hang out with for another 9 days, but we have Noah there. And he's gonna hopefully give us an SBA update and some other stuff. So we're funded by SBA. We're also funded by the state of California of the Governor's Office of Economic Development, which is called GoBiz. Because of our funding, we come to you, small business owners, at no cost. We offer no fee one-on-one advising. That's 100% confidential. And we also offer webinars and educational workshops around all different types of topics and industries for you, also mostly at no cost. The Finance Center, we cover the Northern California SBDC network, and we specialize in helping business owners do nothing but access capital, whether that be for startups or growth, or expansion or buying or selling or whatever, anything to do with loans, debt loans. We help out at no cost. I'm the director, and Sunita Maharaj, she's the associate director. She's also on the call, and she's going to be answering questions with me. She'll answer some as I speak, and then we'll get to all your questions, or hopefully all your questions, before 12 today. And the Northern California SBDC, we cover the most 36 northern counties of the state. We go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area. And then we cover southeast to Stockton, and then back up to the Oregon border. So that's our territory. Yeah, so our agenda is we have a disclaimer. We have the PPP Flexibility Act that came out on June 5th. We have a new forgiveness application. We have an easy form, which we're going to go over today. There's a new forgiveness application long form, or like maybe it's called something else like the regular form. But that we're going to go over Friday, June 19th, and we will blast that out with more leeway than we did today. The new forgiveness application came out yesterday. It came out at nighttime. I'm not sure what time nighttime, but it came out yesterday. And lucky for us, we got to scramble together to put it together for you today. What we're going to go over today is the easy form. And the easy form is for 3 different entity structures, which I'll go over. But we're only going to go into sole proprietor updates today. And then we're going to kind of probably build that into the deck of Friday, and then go over all the other entities on Friday. So how can we help with other loans? Because we're getting a lot of questions on that. An SBA update, and then we'll go into Q&A. So this is a disclaimer. I changed it from last time, if you watched our last time video on Monday. But things are changing all the time. This information was correct when I put the presentation together, but things are changing all the time. EIDL is open back up for all types of businesses, including 501c3s. Unless Noah says otherwise, that is the case currently. There is still money for PPP. I don't know how much. Maybe Noah can tell us that when we get there, or roughly. Currently, unless I missed this in the new application that came out last night, currently, Noah, the latest that you can apply for PPP is June 30th, correct? Or did it get changed?
No, it didn't get changed. So that would have had to require a change in legislation and law. And that wasn't included in the Flexibility Act. So the end of the Paycheck Protection Program for new applications is the end of this month. That is the drop dead date for new applications to be submitted to the SBA.
Okay, and then also, do you know how much PPP is left, roughly?
The last update I had, which was about last week, was we still had a little over like $130 billion. So,
Wow.
yeah,
That's crazy. All right.
a good amount of money, yeah.
Good amount of money. Okay, so you heard it from SBA for PPP. There's about over 100 billion left still with PPP. The last date for you to apply is June 30th. That means you'd only have 13 days. If we count today, it'd be 14. So you need to apply fast if you haven't applied. So this next disclaimer bullet point, you know, we've been getting people that call us on emails or whatever, webinars, and they say, hey, somebody told me I don't qualify for PPP. Like one of our advisors told them that. And that's not our job to tell you if you qualify or disqualify. And SBA is not going to do the same thing. And your lenders aren't going to do the same thing because it's almost illegal to discourage a business owner from applying for a loan. So if somebody told you you don't qualify, they probably lied to you. There's no way that they would know or you would know unless you applied, unless you're a 501c6, you don't have a US ID, and then you do other risque business types stuff. They're not disclosing what the lowest FICO score is. So we have no idea what your credit score, like if it's 500, we don't know. If it's 800, we don't know. So I don't want you to hesitate to apply. And if somebody told you you should not apply, they're not the right person for you to talk to. You need to come to us at the finance center or go to your local center because that's not right. And also, we're not privy to lenders coming forward on the Main Street programs yet. I'm on a call tomorrow with the attorneys from 4 to 5:30. If anybody wants to join, it's a free call. And they seem to know more about that than we do for some reason. So maybe at Friday, maybe tomorrow we'll learn. Okay, that's a disclaimer. So here's the, this is what changed on June 5th. And unless Noah says some of this is wrong, but I did change it from last time I talked to Noah, where he said I did a bunch of this wrong. But here you go. This is what it is June 5th. Then we're gonna go into the new app, the Easy app, okay? So if you're funded after June 5th, then you automatically get the 5-year. So I don't know, Noah, if any of this has changed, if it's in the current, okay, all right, cool. So if you get funded after June 5th, which would be like today, then you automatically get the 5-year loan instead of the 2 years. But if you're funded before June 5th, it's not automatic that your loan goes from 2 to 5. You have to go and talk to your lender and negotiate it and sign a little paper, and then it has to be put somewhere. And we don't know what that looks like yet. I haven't had anybody do it yet, so I don't know. But that's what you have to do to get the 5-year. The covered period, the maximum covered period extended from 8 weeks to 24 weeks. But you get to choose if you want 8 weeks or 24 weeks. And then you also get to choose when you apply for forgivability. It could be 8 weeks, it could be 9 weeks, it could be 18 weeks, it could be 24 weeks. It's whenever you want to, okay? The allowed non-payroll expenses, which is like utilities, rent, or interest mortgage payment if you have a building loan. The minimum or the maximum increased from 25 to 40%. There used to be a 75-25 split. That is out the window. You gotta like take that and throw it in the garbage can because nobody's doing 75-25 anymore. It's all 60-40. The allowed payroll expenses, the minimum went from 75 to 60%. It decreased the minimum. Yeah. The payroll tax can be deferred even if you receive PPP. You used to have to get your FTEs up to the same number that it was before February 15th by June 30th. Now that has been extended to December 31st. there's also that safe harbor in there where you have to document that you tried very, very hard to get your people back and they said no, or they did come back or whatever, you know, as to like if you had 10 people before February 15th and then, you know, December 30th, you only had 8 because you couldn't get the other 2 to come back. If you documented it very well, then, and we don't really know what that looks like either, like 100%, but we're learning. Any business who, so yeah, you get to choose what you want. The other thing that's also really weird, makes it a lot confusing, is your payment, your deferred payment for PPP. It used to be 6 months for everyone, but then they changed it. Now it's 10 months after your chosen covered period. So if you choose 8 weeks, then whatever day is the last day of your 8 week, your first payment will be due 10 months from that day. If you choose 24 weeks, which is about 6 months, it's not exactly, but if you take 8 weeks, which is 56 days, and you times it by 3, you'd get 168 days, which would be equivalent to 24 weeks. So what you would do with that is it would be 10 months after that day. It depends on what day you choose. If you choose 8 weeks, 9 weeks, 18 weeks, 24 weeks, it's 10 months after that day, okay? It's a little confusing, we know, because it's the government and they wrote some crazy stuff for us to understand right now. It's amazing. So here's the new easy form, entity verification. So the easy form, there's 2 forms apparently. There's the easy form and then this long form or regular form, whatever you want to call it. So the easy form is only for these 3 types of business structures, I guess you would say, or your business model, like how you run your business. Because Noah has always been talking about, he says it very eloquently that it depends, a lot of these questions, answers depends on how you run your business, because we have no idea, right? We're not running your business, you are. So if you're self-employed and have no employees, or you did not reduce the salaries or wages of your employees by more than 25%, and did not reduce the number of hours or of their employees, or you experienced reductions in business activity as a result of health directives related to COVID-19 and did not reduce the salaries or wages of your employees by more than 25%. So I actually didn't read this before I just read it to you. It sounds very, very confusing to me just reading it to you. But there you go. This is the easy form. This is the 3 different business models, whatever exists.
Yeah, I can talk a little bit about this. Like Scott, you know, we had this come out last night, so much of it is still being, you know, processed and reviewed and looked over. The high level look at the new forgiveness application process is that first there's the more complicated way, and then there's the easy way. One is called the easy form. And the easy form that was released, you can use that form if you're self-employed with no employees, as Scott said. Like he said, you didn't reduce the salaries or wages of employees by more than 25%. And you didn't reduce FTEs. Or if you didn't reduce salary or wages by more than 24%, and you weren't able to run your business because of a shelter-in-place order, well, basically because of guidance that was issued by OSHA, CDC, or HHS. There are 3 agencies whose guidance, you know, is allowed for allowing you to check that 3rd box. So that's you know, if you had to reduce your FTEs because you were closed throughout the 8-week period or the 24-week period. It'd be more likely, because anybody who got a PPP loan before June 5th is on an 8-week period. You can choose to do a 24-week period, but that's just a choice that you're allowed to do. Majority of people who receive these loans are on an 8-week kind of spending period where they need to be making these payments. And if you were shut down during the past 8 weeks, as many businesses were, you know, you'd likely be able to check that third box, and use the easy form in that case.
Okay.
So to be clear, that's if you match any of those three criteria.
Yeah, it's not all three. It's
any
not,
of them. It's
yeah,
any of them.
Yeah. So if you're bullet point 1, you're good to go. If you're bullet point 2, you're good to go. If you're bullet point 3, you're good to go. It's any, not all.
All right. Thank you very much. All right. So again, for my intro, we're only going to talk about sole proprietors updates today. Friday, we'll recap sole proprietor updates, and then we'll also go into all other entities because we're going to go over the full form on Friday. And lucky for us, we have a whole day in between now and Friday. So here we go. If you as a business owner elected an 8-week covered period, and it does not exceed 8 weeks worth, okay. So if you choose 8 weeks as your cover period, you're capped at $15,385. As a sole proprietor, if it's husband and wife, it's that times 2. If you have 10 employees, then that's the max for each employee. That's the number, $15,385. If you choose 8 weeks. If you choose 24 weeks, regardless if you spend it all in 10 weeks or 18 weeks, I guess, unless that's wrong. But if you choose 24 over 8, your max now per individual and per sole prop is $20,833. So it went up a little bit, didn't go up a lot. I didn't do the math yet, but
The only thing I would add on to that is that's the cap.
the cap, yeah, that's the cap, yeah.
So it says 2019 compensation or whatever the cap is, and if you have to choose between the two of them, it's whichever is lower.
Oh, it's whichever is lower.
Yeah.
All right, that makes sense. Okay. All right.
So if you're a sole proprietor and say you paid yourself $50,000 last year, you have a lower amount than $15,385 that you'd be able to pay yourself, and you'd be limited to claiming just that.
Okay, sounds good. All right, so this is our last update slide, because then we just go into like other loans. But this is sole proprietor only again for rent, interest, mortgage payment. I should have said mortgage interest, sorry. Interest. So either you pay rent or you own your building and you have a loan, you pay interest, and then utilities. So payments of interest on mortgage obligations on real or personal property incurred before February 15th to the extent that they are deductible on the Form 1040, Schedule C. So hopefully if you're a sole proprietor, you know you have a Schedule C. 1040 is taxes that all of us as individual people file in the state of California. There's a Schedule C if you're a sole proprietor or have a 1099 contract position, or you self-employed or whatever. It's a Schedule C. So if there's on the Schedule C it says business mortgage payments, then you can count that. Rent payments on lease agreements. So rent payments. So the first one is interest, which is if you pay partial interest. So if you're a Schedule C and you own your building, then you would have mortgage interest. But if you're a Schedule C and you work at your house and you have a mortgage on your house and that is partially broken up on your taxes because you as an individual charge your business to pay rent per se, but part of the mortgage. So, that's probably a little fluffy there, or a little, maybe.
I mean, when we talk about, one of the items that, and I think this might have been, maybe added between the old forgiveness form and this new one, is that language. It says to the extent that they are deductible which really says that mortgage obligations, rent payments, and utility payments, the definitions and the guidance you should be using when figuring out what falls into these categories should really be driven by existing IRS guidance and definitions. And I think that's, people have been kind of looking to the SBA a little bit for like, what's your definition of rent or what's your definition of utility? And there's actually longstanding, well-defined, policies and programs around deductibility for specific categories of expenses that we're pulling from in order to look at these categories. So my advice at this point also is, if you have questions about utility payments or rent payments, or what is a business rent payment, or what is a business utility payment, you can ask an accountant or in some cases a bookkeeper they might know, or a CPA, what would normally be deductible under your business, for a rent payment or utility payment.
Okay.
And you might even, as the SBDC, you might consider having some accountants on to talk about that also maybe in the future as well. Just normal situations under which business expenses are deductible. You might have even already had that, I think, Scott.
Well, we got to be careful when we bring accountants on.
Yeah, you can't give tax advice. It's sort of
no,
the sense
I'm not talking about that. I'm talking about, yeah, never mind.
Okay.
We got to be careful. Never mind. I got to be careful what I say. So
we've decided to keep these things about loan advice rather than anything else.
Mm-hmm.
Well, there's that, but yeah, okay, cool. All right, I'm gonna go to the next slide. Okay, so thanks, Sunita. You're muted.
Thank you. Sorry, the trash guy was coming by. That document, that verbiage came directly from the new internal, the IFR, the rules. So that's where that came straight from.
Mm-hmm.
Would you like me to post a link to the IFR so people can look at it themselves if they want?
Do people really want to read IFRs? Or you can put the link in.
They're not going to want to read this. It's
super great read.
It's like, yeah.
And everyone, you can find a copy of, if you're unsure, the 2019 Schedule C online everywhere. You should have also completed one when you got your PPP, even if it's not, hasn't been finalized yet, or I'm sorry, if it hasn't been submitted to the IRS yet. It should be in final form though. That's what was requested from the beginning. The numbers should be pretty spot on, even if you haven't filed yet. So that's where you're going to get that information in regards to utilities and such.
Thank you. So we know that most of you are probably going to have questions about PPP forgiveness, since you just saw us talk about it and it came out last night. So I'm not going to go into this too much, but we can help you with all these types of loans depending on what stage of business you're in. We can also help you with the EIDL, Economic Injury Disaster Loan, which we opened, the PPP. And then any of these other loans you want, we can help you at no cost. And we know lenders that are doing startup loans and reinventing loans and buying business loans. The great thing about buying a building right now is that SBA's rate, it's when you buy a building, it's called a 504 mostly. It could be a 7A, but mostly it's 504. And the codes 504 and 7A, they don't really mean anything to you or us. It's just a stupid number that SBA made up, and they put it in the thing, and then it confuses everybody in the SOP.
That's the legislation. It's from, we named it after the legislation. It's
There you go. There you go. They named it
Something
after
with the 7A. It's like section 7A
Yeah.
of a piece of legislation. So,
There you go. So that's
Very
what it is. Okay. So a 504 loan, really quickly, you put 10% down as a business owner. SBA will give you a 40% of your loan of the value. So you put 10% down of the building value. SBA will give you a loan for 40% of the building value, and that rate currently I think Noah is like real close to 2.5, like 2.6. Yeah.
Yeah, it's between 2.5 and 3. It's pretty dang low.
Super, super low. Probably the lowest we've ever seen it. Lowest I've ever seen it. And that rate is a 25-year rate. And then you have 50% of the value of the building from a lender. And that rate is dependent on the lender. But prime is at 3.25, the US prime rate. So most lenders will probably do 1 or 2 over that, maybe 3. But you take the 2.5 or 2.6 with SBA, you add it to the 4 or 5, whatever you get from the bank, and divide it by 2. That's what's called your blended rate. And your blended rate is pretty dang low, which is pretty amazing. So what that means is, I know I'm getting into like the super weeds, but what that means to you is that if you ever thought about buying your building and you had the opportunity to buy your building, now is the time to buy it. Probably the best time in US history, probably. What that means is that you can probably buy a building and your mortgage payment will be less than your rent. Almost positive. And if you don't know how that works, or you have questions on that, or you're jumping up and down because you're so excited because you wanted to buy your building, we can help you with that at no cost. We can help you put your package together, your loans, your financials, and we help you find a lender. We can help you understand your financials and tell the story that lenders want to hear around what the numbers mean to you and them and us and all that good stuff. We can do that for you at no cost. So if you get one of those loans and it is a 7A or a 504, you go over here. If you get one of these loans here, one of these, how many loans is this? There's 8. If you get one of these 8 loans types, then you get a 7A or 504, SBA will pay your payment for the first 6 months, principal and interest. And they don't have to pay that back, right? No, it's like given to them. So it's not a deferral. You don't have to pay it back. It's 6 months paid payment, principal and interest. It's freaking phenomenal. I'm not sure that's ever been done before, ever. But so we're in a new world. It's amazing. SBA is stepping up to the plate, doing some really cool stuff. SBDC is also stepping up to the plate, and we're doing some really cool stuff. But we have the support of SBA, and we're bringing all this to you at no cost, and we're here to help in whatever you need, regardless of the time of the day. We're here to help. So SBA has a number you can call for your disaster loan. This is the top portion of this slide is for SBA to pay your payment of new loans and existing loans, existing loans you currently have, which if you have an existing 7A or 504, they've probably already told you about it, that you qualify for this. But the other thing, the bottom part of the slide is strictly just disaster, just EIDL, economic injury disaster loan. That's all, currently that's the national thing that we're experiencing. So SBA disaster contact info is this number. The email is right here. And then if you were denied and you're trying to reapply, there's a reconsideration email right here. But you shouldn't send that reconsideration email. You just don't send them emails and say, hey, I'm here, I got denied. But you send them an email with a bunch of stuff, like your credit report. They'll tell you in the email that they give you what you need to do to reconsider. But besides this, and Noah helped out with understanding some of the other stuff, is there other updates that you have, Noah, from SBA?
Well, yeah, there's a big one, which is that our economic injury disaster loans are accepting new applications now. So for the past month, the economic injury disaster loan program was closed to new applications, unless you were an agricultural business. And on Tuesday, we opened that program to all new applicants. So if you had not been able to apply to this program because it had been closed over the past month, maybe month and a half, you can go there now and put in new applications. We can put the link to that application in the chat if folks want. That COVID-19 relief URL.
Yep, I've got it.
Okay, great. So COVID-19relief.sba.gov. That's where that application is. That is with the economic injury disaster loan, comes with, thanks to the CARES Act, also a forgivable EIDL advance. So when you put in that application, you can receive up to $10,000 that you don't have to repay, regardless of whether that loan gets approved or not. So the up to $10,000 is calculated based on how many employees are listed on the application. So $1,000 per employee. And that's just a direct deposit straight into your bank account that does not need to be repaid. And then after, I think we're looking at, some applicants, it's in, 6 weeks, 7 weeks or so to get the full loan underwritten and dispersed. But as the Office of Disaster Assistance underwrites those loans, it can technically be as a loan as large as $2 million with a 3.75% interest rate. Majority of applications are less than that. The loan sizes tend to be around $80,000 to $150,000. But these are working capital loans. They do have to be repaid back, but they've got a very competitive interest rate and really, really flexible terms, and they're 30-year loans that are intended to help folks recover from any disruptions to their business that they're facing right now.
Thanks, Noah. Hey, Noah, do you have any updates on the reconsideration process? We have a lot of people that say that they sent in reconsideration like one day and then they haven't heard anything back. So then they sent it in again and then they don't hear anything back. So what's SBA doing about that? Like, are they making that easier? Should they just tell us? They shouldn't. I think they should just tell us people to reapply. But I know, like, what is SBA doing about that?
No, if you've received a denial and you reapply, you'll just get denied again.
Yeah.
So I wouldn't reapply because maybe your denial. The assumption when you've gotten a denial is that was a valid denial based on all the information in the application. So if, for whatever reason, when you fill out the application, you were an ineligible entity type, and we reviewed it and we said, okay, you don't meet the categories of this program. You're a 501c6 or you're not even a business or something like that. You shouldn't go and reapply because you'll just get the same denial back. The reconsideration process is for folks who have received a denial and want that status to be changed or reconsidered. And what they want to see is new information that was not available in the original application that was submitted, that it addresses the reason for the denial. So it's not necessarily a plead your case kind of situation. It's in some cases, a denial has been as simple as unverifiable information. So they weren't able to verify that you were an operating business during the underwriting process. And they might ask for your articles of incorporation or some information from the Secretary of State, providing additional documentation showing that the business was a real business. Or in other cases, it might be because you didn't meet a credit score threshold. And so what they would want to see is that you had taken some action to change what your credit score was to improve it. Whether it was credit repair actions that you took or you worked with some of your creditors to adjust that. So it should be tailored to the reason for the denial. And you can email our local district office if the reasons for the denial are not clear enough. and specific enough, and we can ask for folks to provide some additional information. We can request from the Office of Disaster Assistance to take a little bit closer look and provide some more detailed information on that, so that you can make a more detailed reconsideration request. And yeah, so that's my sort of discussion around reconsideration.
So you haven't, is there like a number they can call for reconsideration, or only an email? Or is it the same number?
That's the email address, and you can call the 1-800 number. I'm not sure. I haven't called it lately, so I don't know if they have a specified telephone tree option just for folks going through reconsideration or that have reconsideration requests. And so
Okay.
I'm not sure if the 1-800 number would help or not. It might. I mean, that is, they'd at the very least be able to tell you yes or no, this is the place to go. But
okay, interesting. Okay, all right. Thanks, Noah. Those are some of the questions I've been getting.
The 1-800 number is the official number for the Office of Disaster Assistance, including all questions, including servicing, including questions around reconsiderations, including applications. So I would never tell people to not call that number. I just don't know whether the folks at the other end of the line, they've got a lot of training around helping people with the application process and underwriting, and people who are kind of in consideration for their underwriting process. And I think sometimes there's a time lag, because now people are getting denials, and you're going to have a lot of people going into reconsiderations, and the folks on the other that phone line are going to have to come up to speed on reconsideration discussions and what those mean. And I don't know where they are at that moment in terms of that right now.
Okay. Where is the reconsideration department? Is it inside ODA? Is it on top? Is it in the second floor where Heather is, or where's it at? I want to find these people. Where they at, man?
So I think everything's distributed right now. So everybody's working remotely, including, so you can't find them. They're behind you. They're behind you right now.
Well, it's funny because I can find you. You're in a hammock. I know where you are, but I don't. Okay. All right. We'll get to some questions. I know everybody's.
But in terms of servicing on disaster loans, there's two locations. One is Fort Worth, Texas, and where's the other one? The other one might be Sacramento, actually, but I know that one is Fort Worth, Texas. There's two servicing offices for disaster loans. I don't remember where the other one is.
All right, cool. All right, sounds good. So this is our phone number. We're gonna go to Q&A. We're gonna go to live Q&A. Suni's been answering some questions, so thank you, Suni, for that. She's answered about 22, and there's 26 left. I was watching the number go up, so I'm assuming we'll get some more questions. So the phone number is to call us and talk to a live person. I recommend you do that, then email us, because email is not as fast. It's same day still, but it's just not as fast. 833-ASK-SBDC. You can go to asksbdc.com. We are our marketing director, Aaron Phelps, up in Humboldt. He is working on a new awesome website, asksbdc.com. That would be more interactive. You can see these videos live streamed on there. You can see past videos on there, I think. You can also email us at loans@asksbdc.com. We'll get back to you same day. We'll get you an advisor right away. If you speak Spanish, or you want us to speak Spanish, or you want to talk to somebody who speaks Spanish, you can email our Spanish speaking team. It's espanol@asksbdc.com. Oscar Garcia in Sacramento works really well with Julian Canetti, the CEO of the California Hispanic Chambers of Commerce. And they do everything that we're doing currently in English here for you today, Monday, Wednesday, Friday. They have a Spanish speaking webinar they do every Thursday. And I think we should do a better job of promoting that, but it's every Thursday from 10:30 to 11:30. I don't have the link, but I'm sure somebody else, like Alan or somebody, has the link, so we can go there and learn all about that too. So we're gonna jump into Q&A, and we're gonna jump into Q&A.
You want the case force link posted? Did you say?
Yeah. Well, no, you could. No. Do you have Oscar's link for his Hispanic speaking? And
Yes.
if Oscar's on the call, which I think he is, just Oscar could put it in the chat too, or maybe if he can, he can send it to one of you. But there's the 10:30. I think it's 10:30 to 11:30 every Thursday. Oscar Garcia and the Spanish. What is it called? Sorry, Oscar Garcia and the California Hispanic Chamber team. They do this in Spanish. It's a really great presentation, and they also field questions as well, as much as they can. And then also Thursdays from 4 to 5:30. That's our case force, but we partner with some attorneys. They answer all the questions that we don't answer or don't know about, like PUA, PUI, and EDD, and real estate law, about what your what's it called? Whatever. Just real estate law, HR law, and then we talk about loans. What were we gonna say, Sunita? No. All right. So here we go. We have the call goes to 12. So we have 43 minutes. We've answered 23. We have 28. We're going to do our best to get through all of them. So here we go. So PPP, can you explain how to calculate FTEs according to the new forgiveness application? So I don't think it's changed, right?
Yeah, so this didn't change significantly from, it didn't change at all between the new.
It didn't change. I mean, an FTE is still an FTE, and FTE stands for full-time employee, and that is 40 hours. Yeah, I guess not or more, but that's 40 hours. Yeah.
The short answer is there's two ways to calculate FTEs, but if you had anybody who's more than 40 hours or 40 or more, it's 1, and if they're less, it's 0.5. And there is a method that's listed on the forgiveness form if you want to do something that, like if you want to calculate it down to the, more accurately than that.
Yeah. Okay.
You can look at Schedule A on the application and figure it out that way. It's pretty in depth, so it's difficult to go over that at this point in time. We'd have to do it in sections. So, one day we just go over that because it's a lot of information and it will get confusing.
Yeah, all this stuff gets really confusing. Like every day it changes and gets really confusing and fun and exciting and challenging.
We have another FTE question. PPP, how does using the 24-week option affect the FTE values? And there's more to that.
But doesn't change. Nothing changes. That's what's weird about it.
Well, yeah, so this was a good question because it's something that I've been getting initially after the 8-week and 24-week question about whether you'd have to maintain FTEs throughout the 24-week period, at an average across the 24-week period. At the moment, that's the way that, that's the way that it looks like it is written in the forgiveness form that was released last night. So
it is an average throughout the 24 weeks.
That is what it appears to be, an average over that 24-week period.
Okay.
Which I think is important for business owners who they might have only received PPP funds for 8 weeks. So, what do you do with that other 20 or with that, with that other 16 weeks, right? How do you pay for that payroll? That's something to consider whether you're going to elect using an 8-week or a 24-week period. You should think about that.
Okay. Let's see here. Would we keep? Yeah. Would we have to keep at least 25% reduction throughout the 24 weeks, which we just answered? Would we have to work share? We have a work share program approved and could do a decrease in hours worked to stretch out funds. how would the 24-week limit us our use of this?
Yeah,
And then I don't know if we want to go to the second one because we might be able to answer both.
I kind of answered that, which is that it doesn't look like you'll be able to submit an application before that covered period ends. That you need to wait until the covered period ends in order to submit your application. And it's going to look at the entire covered period for FTE reductions.
Yeah.
I will just add on the FTE reduction item. There are, I think, 6 exemptions that are baked into any FTE reduction calculations that you might end up having when you go to look at any, whether you would need to account for a reduction in FTE for a particular employee. So if a particular employee chose not to return back to work after you offered them, after you made them an offer to rehire, you would not count that FTE. If an employee was fired or if they voluntarily reduced their hours, then you would not count that FTE reduction. If you had a position that you weren't able to fill with a similarly qualified employee by December 31st, you would not count that FTE reduction. If you were not able to return to your normal level of business activity because you are complying with OSHA regulations or CDC regulations or HHS regulations, you wouldn't count any reductions in force because you were following those guidelines. What are the other? Did I forget? I know I've been getting really good at these exemptions here. And if you, I mentioned fired, I mentioned voluntary reduction. There's like those 5 or 6 different kind of flexibility around different situations why you might have a reduction. That's that you would take into account before running into any loan forgiveness reduction calculations.
That's great. So they really opened it up and they're looking at everything about what's going on currently and how employees are not coming back until after, the $600 boost to their income on a weekly basis. So that's happening a lot.
Yes.
PPP for the covered period, can you choose 10 weeks or 12 weeks, for example, or do you have to select the 8 or 24 weeks?
It's 8 or 24 right now.
Yeah, but you can file for forgiveness anytime between 8 and 24, correct?
You mean while your covered period is still going? I don't actually believe so.
We can't. I thought we talked about that. We like last week or something like that.
It was it was a question mark that we had. Whether and I think actually the intentions and some of the discussion and some of the reporting and and if you had watched some of the Senate hearings last week, there was this question raised as well whether an individual could apply in the middle of their covered period. And this particular question, honestly, I would watch.
Okay.
Right now in the forms and in the documents that were released last night, there is not a mechanism to do that. To do that before 24 weeks? Yeah, before your 24-week period is over, because you need to calculate. I mean, in order to make your calculation, it's your average. You need to calculate the average period, or the average salary reductions, or the average salary over the covered period. And if the covered period hasn't ended, I don't see how you could do that.
Yeah. Also, the banks, the lenders are not ready for you to turn your paperwork yet.
That's the other really important thing to remember is none of the lenders. You can pick up this application, you can fill it out, and you can bang at the door of your lender, but they're not going to accept it because right now the lenders, we just released the application last night, and the lenders are going to have to interpret it, run it through their legal departments, build it into their applications, set up a process flow for managing applications. I imagine it's going to be you know, a while before a lender opens up the door for allowing for forgiveness applications. I know of no lender that is currently accepting forgiveness applications, and I think it's going to be quite a while before a lender will even start processing them.
Yeah, all right, sounds good. Are payments to HSA accounts forgivable with the PPP loan? So HSA health savings account, right? That is forgivable, correct? Because it's right, it's part of the benefits package, right?
It's part, benefits. If it's one clarification is that if you're a self-employed individual and you're making that on behalf of yourself, it would not.
Okay, sounds good. All right, we received a PPP on 5/4 when the covered period was 8 weeks. How do we choose the 24-week period versus the 8-week period? I think you just have to go talk to your lender, right? Are lenders having these conversations with them?
So the 24-week period versus the 8-week period is something you'll be able to elect unilaterally on your forgiveness application form.
Oh, that's cool. Okay, so you could choose.
So this is not something, the 8-week versus 24P period, you don't actually have to negotiate. Anybody who received a PPP loan before June 5th can essentially choose their covered period on that application form. If you received it after June 5th, you'll only have the option of the 24-week period.
Okay, sounds good. Can an S corp use the easy form? I'm confused about the 3 criteria. Well, it depends. Like an S corp if the S corp that is a single member S corp and it's a pass through, so technically I think you would be able to, right? If it was a single member S corp, correct?
That makes sense.
So if it's single member, yes, Carolyn. If it's not single member, then no.
Maybe. Well, if it's not single member and you have employees, then maybe you could fall into one of those other 2 categories. You know, like if it's a multi-member S corp where you've got employees under it, and you saw no reduction in salary to those employees, you could fall into one of those other 2 bullets.
Okay.
Yeah, it's not just for sole props.
Yeah. Okay. Yeah. All right. So somebody says, can you explain alternative covered payroll period? So Noah, there still is an alternative cover. Okay. Yep. So the alternative covered payroll period is, say you get funded today, but your first paycheck period doesn't start till Sunday. Then you can choose Sunday as your first day of your 8 weeks or 24 weeks day. But if you get paid today, you get the money today and your next payroll is not due until not this Sunday, but next Sunday, you can't choose that next Sunday. It has to be within 7 days of your first payroll. So that's where it's tricky, Noah, because one time
it's only for employers who have payroll that's on that have a bi-weekly payroll cycle. So if you're an employer and you've got a bi-weekly payroll cycle, you can choose to have your 8-week or 24-week period start on the first day of your normal payroll cycle. If you don't fit into that box, then your 8 weeks or your 24 weeks are going to start from the day that funds are dispersed in your bank account.
Okay, sounds good, man. All right. I got an EIDL advance in PPP funds, the last and EIDL loan. Well, that's awesome. Congratulations, Ken. While I was applying for EIDL, the loan officer asked if I wanted to roll my EIDL advance into the PPP funds. Given the 8-week forgiveness window at the time, I elected to make the advance part of EIDL. Now that the forgiveness window has been extended, I'd rather that the advance be part of the PPP. Is there any way to retroactively reverse? Okay, well, Kent, your lender, I think, confused you. It's a really weird question that, unless you got confused when you wrote it, but this is what happens. You get a PPP and say it's 50 grand, and then you get an EIDL advance. let's say it's $5,000. So what happens is, this is for every lender and every business owner, because it's not a lender idea, it's a PPP Treasury SBA idea or law. So you get 50 grand from PPP and 5 grand idle. What happens is your total forgivability of PPP is 50, but now that you got an idle, your total forgivability amount is 50 minus 5, so now it's 45. So the 5 grand of idle, it doesn't become a loan because that doesn't make any sense. That money's in your bank account and you get to do whatever the heck you want to do with it. The 5 grand that it takes away from the PPP total forgivability, that automatically turns into a loan at 1% for either 2 or 5 years, depending on when you got funded. So that's the truth, Kent. Don't talk to your lenders anymore. Just call us, okay? Has there been an update on the definition of transportation?
Only to the sense that you know, kind of the answer is a business utility payment is to the extent that it to the extent that it can be deducted on your taxes. So if you have questions about what a business utility payment is, you know, that's something that you can have conversations with an accountant about whether that is a deductible expense.
Right. People are asking for daily gas if they can put, you know, I put gas in my car to go to work, you know, a certain place. That is not considered a deduction on your Schedule C. So if it's considered a deduction, that's where they're going to get that information from. Just like Noah was saying, there's different ways of doing that. So that's why it's not. That's why we believe it hasn't been narrowed. It's been kept open, a little bit more broad, because they want you to be able to use that money in that way. But yes, definitely talk to your accountant. We may have some specialists that would be able to answer that question, but it's something that we have to get together with our group and figure out as a tax preparer what that means.
Mm-hmm.
All right, sounds good. We received PPP on 4/30. Can we use the charges of utility of April paid in May and forgivable? I don't know.
So this is about, yeah, if someone received, if they have had expenses prior to receiving their PPP, whether they can use those expenses.
Yeah.
And you know, if they got the, you know, if they had a rent payment that was, you know, due in May, but they got their PPP in June, right? Could they use that expense that they had the month prior? Would that be a covered forgivable expense? The way that it is written is that business expenses need to be incurred or paid during the covered period. And if you have a bill or an expense that falls outside of that covered period, there's some treatment explicitly, you know, given for a bill that falls after the covered period. So like say you've got a utility bill and at the end of and it falls in the 25th week, right? You've got a 24-week period, but this bill falls in the 25th period. It's your utility, you know, your internet bill. That's okay. So if it's a rent, if it's a rent, a mortgage interest, or a utility bill that falls, you know, during its regular billing cycle after that covered period, you can include that, and it's a forgivable cost. It is not explicitly treated, you know, what happens for stuff that happened and that was incurred prior to the covered period. And so my answer to this is that under the Paycheck Protection Program, we have issued delegated authority to our lenders to interpret SBA guidance and implement this program. And the answer to that, in my opinion, really falls on your lender and what your lender will accept when you go to apply for forgiveness. If you want, out of an abundance of caution, if you want to take the abundance of caution approach, my discussion with business owners is to just stick to the four corners of your covered period and look at expenses incurred and paid during, during that 24 or 8-week period. There are allowances for bills and expenses that are incurred during the regular billing cycle after that 24 or 8-week period. There's big question marks about items that were incurred prior to the 24 or 8-week period, and those question marks are kind of will end up depending on your lender that you're working with.
All right, thank you.
Yeah, that's kind of lay of the land around the known knowns, the known unknowns, and the unknown unknowns.
Okay, that sounds fun. Sounds like you're having fun over there. I'm telling everybody to email you at sfomail@sba.gov, because how come we're getting so many freaking questions around people? Noah, I know it's not your fault, but how come people are getting the loan before the advance? Like, this is so weird, right?
Yeah, that one is a known issue that I've worked with the Office of Disaster Assistance on. People are getting loan offers who did not receive the advance. In many cases, it was an issue with there were a number of applications that essentially got stuck in terms of processing those advances. I've heard from our Office of Disaster Assistance that an email should be going out to anybody who's not received an advance with guidance around this, and maybe even a link to a web page where they can update their banking information and get the advance issued. But it's a known issue. It's one that I've worked with a lot of business owners on, and the only thing I can say on that is that I have heard from our Office of Disaster Assistance that we're supposed to be hearing communication on the resolution to that issue, either this week or the next week.
Okay, sounds good. Please. Carolyn Heinrich, you keep asking a lot of questions. Just please call us and we can help you out. I don't know how to answer your other question. I'm not going to ask it because you ask a lot of questions, Carolyn. All right, so husband and wife who are both self-employed and file a joint tax return. Husband and wife both self-employed and file a joint tax return. How can we count the number of employees? If we apply for PPP under the husband name, should we count the wife as the employee? Can we use the easy form then? I don't know, Kyoko. This is a very specific question. I'd have to see your taxes. So
it kind of depends on, it depends on, their, do they file W-2s for one of those, one of the members of the family? This is one of those very fact specific sort of questions that depends a lot on the business.
Kyoko, just send us your taxes at loans@asksbdc.com. We'll help you out. I just received email notice on the EIDL that we are eligible for 150. We're looking for a higher amount. We would like to contact the SBA rep that is working on our file and find out if we can increase the loan. Do you have that direct contact info? Yes, it's just Noah right here. He's like in a hammock somewhere. You can find him. We don't know. So if they want to ask for more or this is not a reconsideration because it's not a decline, but if they want to ask for more, Noah, do they just they email the person that emailed them, or what do they do?
So the answer to this is that they can keep trying to go down the 1-800 number and try to get connected to the loan officer that's working on their specific file. They wouldn't go down reconsiderations because they haven't already accepted that loan. And then they could also email disaster assistance at sba.gov to ask about that. But those are kind of the two pathways for working on applications that haven't already had a loan fully underwritten and issued.
Okay, cool. Okay. If we use up the PPP loan before the 24-week period, or do we have to wait till 20? We don't know, Gina. Everybody's asking this dang question.
Well,
we don't know.
I mean, the way that it's currently written is it does appear to be that, that it's a 24-week period that you'll end up having to wait. But I also want to put a flag at that particular item because it's one that we've had a lot of questions on, and modifications and changes and issues, with the Paycheck Protection Program. I think we're kind of starting to get familiar and used to them. And I think that's one that, especially given that no lender is even accepting loan forgiveness applications right now, that I would kind of put that one to the side and really, wait and see if there's additional updates on it.
Yeah, okay. All right, so if you only get 2.5 times your monthly payroll for PPP, essentially 10 weeks of pay, how are you supposed to keep your FTE fully employed for the entire 24 weeks? Am I missing something? You're not missing something, Christine. It doesn't make sense. The numbers don't add up. It's not going to add up ever. So what you should do is you should email us so we can talk about your specific situation. But if you, yes, 2.5 times your monthly payroll, rent, utilities, and interest mortgage payments, if you have a mortgage payment, is what you qualify for PPP amounts. You're not supposed to do anything really. There's no supposed to, Christine. It's how your business is built and ran. So what that means is, if you want to keep your people on for 24 weeks, you can do whatever you want, especially if you have people coming in your business or buying your stuff. But it's not going to be forgivable because there's a max on forgivability per employee, and it's $20,833 if you choose 24 weeks. So, Christine, your question's a little flawed. Just, if you want, you can call us or email us. We have our information here. It's a very specific question that you have.
Well, no, it's a good, in the sense that 24-week, the maximum that you can receive under the PPP is 2.5 times your payroll costs. So it's a little over 8 weeks. It's like a 10-week period essentially. But the new covered period, in which you can have eligible expenses, is 24. So you have funding for 10 weeks, but you may make eligible expenses over a 24-week period. So the PPP loan is not going to pay for a full 24-week period of full employment for all of your employees. That, disjuncture is something that we're getting a lot of questions on right now. And I don't have we don't have necessarily all the answers around it, aside from saying that you've got 5 or 6 different categories of exemptions for any FTE reductions that you might have run in during that time. I think there's an expectation that businesses will be up and running and have people reemployed, and also wouldn't necessarily run into FTE reductions because they will be able to pay for their own employees out of their revenues and sales and business operations after that 10-week period as well.
Okay, sounds good. Thanks. All right, it's a good question. With the option of 8 or 24-week covered period, if I choose a 24-week covered period, can I put down the June 31st for my FTE calculation date, or do I only measure FTE on December 31st? So, Joe, what you need to do is, you don't need to wait until June 30th, or you don't need to wait until December 31st. It's just that you have to get your total FTE back up to what it was before February 15th. You don't have to wait a certain day. Because if you do that, then...
Yeah, it's an average over the period.
Yeah. We opened the EIDL portal and it said our loan was declined. The email had our application number for the second application, but the denial was for the old number. For our next steps. So Mary, I'm just gonna have you email SFO mail at SBA.gov.
Yeah, if you have questions about the denial itself, I mean, generally when people submitted multiple applications, those applications, especially if you put in the same EIN number for that application, they're bundled together. So whether it have the old application number or the new application number, they're not treated separately, especially if it had the same EIN number. So those should have been bundled together.
Okay, sounds good. So it's 11:46. We have 14 minutes left. We've answered 70 questions, and we have 6 left. My lender asked for 2019 Schedule C release funds. My accountant can't provide an estimate before filing taxes. What if the final Schedule C changes on my tax report? How does it affect my loan? So Dan Gudino, here, just go ahead and call us at 833 Ask SBDC, or send your taxes to loans@asksbdc.com. And guess what? We can help you, okay? Because we know more than your CPA does. Our company will not be open until at least September. So if we get the PPP today, we have to start using the PPP within 7 days. We can't wait to use it until September when the business opens. Is that correct? Well, Christine, you could.
Flexibility comes in on this one.
Yeah, it does. It does come in on this one, but yeah,
There's a lot of strategy, you know, for
there's a lot of strategies for this, Christine. Please call us at 833.
Yeah, so there's a few different options here when you say, I mean, so your clock starts on the day of disbursement. That is true. So day of disbursement, or if you're using the alternative payroll period, it's from the, and you're on a biweekly or more frequent pay period, it's on the first day of your regular payroll cycle. So, but that clock starts on the first day. When it looks, but you'll have 24 weeks if you're electing to use that period to spend those funds. And say that you're going to be closed for 2 months, and then you're going to be opening, open and at full operations for, September, October, November, December. You could even, staff up above what you were, prior to the disaster, and ultimately your FTE reduction count is going to be based on the average number of, on the average over that whole period. So if you're not at full operation for some of those weeks, it's okay, but it's based on the average over the whole period.
All right, cool. On the subject of the staffing service with fluctuating workforce that Sunita answered, does the average also apply to the hourly rate, which also fluctuates with each assignment?
It's going to look at the total amount of compensation that's paid to an employee over that period of time. So even if their hourly rate changed, between Tuesday and Thursday, if the amount of compensation paid to an employee over that, that full week, is, even if it was $100 one day and, $1,000 another day, it's going to look at the total compensation for that employee over that period of time.
Okay.
So it's not going to look at what they were being paid per hour. It's based on total compensation.
Okay, sounds good. Says I have a union client and he wants to know if union contribution deductions qualify as payroll expenses.
Yeah, I've gotten that one before. And there's not an explicit treatment of, explicitly saying, yes or no on that. That's one where I would say to defer a little bit to your lender and your lender's interpretation of, there is a broad definition of benefits that are included under this program. But union contribution deductions aren't, explicitly listed, doesn't mean they're excluded. It kind of means, where there are question marks, all lenders have delegated authority to interpret the guidance of the program. And on items like that, it's really a matter of working with your lender to understand what they would be willing to accept when you go to apply for eventual loan forgiveness.
Thanks. All right, we have 9 minutes. We've answered 76. We have 3 left. We have a really long one here. So you need to answer this in general, but to be more specific, here's a scenario. If you are a sole prop and get $20,000 PPP loan, assume that only 8 weeks is forgivable out of the 2.5 months times line 31. A Schedule C, the loan is based on 10 weeks versus 8 weeks. Then if you get a $2,000 idle advance, you would reduce your forgivable by 2,000. Does this mean that you would have 2,000 idle plus 16,000? So if you 2,000 a week, 18 versus if you just did not get the idle advance and have 16,000. All right, so TCB.
So the 2.5 times line 31 on your Schedule C, that's
your loan amount.
maximum. That's the maximum that you're eligible to receive. There's no interaction between your idle advance and the maximum loan size that you're eligible for. The interaction between idle advance and idle only applies when you go to ask for forgiveness.
Yeah. So TCB also, so if you get approved for 20 grand, that would be your total amount of forgivability in 8 weeks. So what that means is if you get a $2,000 idle advance, you take 20 grand minus 2 grand, and that's 18 grand. Now your total forgivability is 18 grand that you have to spend in 8 weeks. Actually, either 8 or 24, change, but yeah. So I don't know where you got the number 16, but that's wrong. So if you want to talk about it later, you can email us or call us at 833. Just blow the phone up, okay? We got people. They answer the phone, okay? Blow it up. Ask a bunch of questions. Have fun with it. Have a heyday. What can the idle advance be used for? Evelyn. We answer this all the time. It can be used for like a lot of cool stuff.
Has the same terms as the idle itself. So, but it's pretty much any working capital purpose. The intention is that it has for business needs.
PPP, we're in week 7 and have reached the 60% minimum payroll costs in regards to FTE. Do we now have until 12/31 to get them back up where we were? That's true. You do have now until 12/31, yes. Or do we have to make them up in the next 2 weeks? No.
Well, it depends if you wanted to use the 8-week or the it depends if you want to use the 8-week or the 24-week period. Ultimately, the FTE count during the covered period is what gets looked at.
Okay. All right. I had actually increased my employees' wages to take advantage of the most of the PPP loan amount when I had 8 weeks to use it. Can I now ask for 24 weeks to use it and go back to the usual rate of pay?
Yeah. When you go to apply for forgiveness, it's you only elect you elect your covered period when you go to apply, which the deadline for applying for the Paycheck Protection Program is October 10th, 2021. So it is next year in October. And when you get loan forgiveness applied, it includes any interest that may have accrued as well. So, this is really, that there's a long window for, kind of waiting and watching and seeing how this process evolves. It's something I would also let folks know.
Okay. Our 8 weeks ended yesterday for the PPP loan. If business is still slow, can we reduce hours for employees? 8 weeks ended yesterday. If business is still slow, can we reduce hours for employees, or will that affect our forgiveness? Also, how do we go about loan forgiveness. Our bank has not provided information. So Serena Gerwal, yeah, your banks don't know anything right now. Like nobody really knows anything around forgiveness as far as how to get the forgiveness and what paperwork to collect. And, you know, SBA and the Treasury said you have a year after you claim your forgivability. You have the year after your covered period ends to put all your paperwork in to get your forgivability. That's right, right?
It's even longer actually. I mean, but yeah.
Now it's really long. How long is it?
Well, no, sorry. I mean, you have October 10th, 2021 is the date for, that's the deadline for getting all forgiveness in.
Okay, sounds good. So Serena, just call us, okay? We can talk to you because your bank doesn't know anything. So
yeah, most loans aren't ready to, or most lenders are not ready to accept loan forgiveness applications and aren't doing it yet. And to that question about whether you can reduce hours, the FTE counts and salary reduction calculations, they all apply to that 8-week period. So they don't look at what happens after the 8-week period.
Yeah. Okay. Sounds good. So we answered 81 questions. We have 3 minutes left. David did a great job. Sunita had to go to another call because we are being pulled in several different directions. So Friday, we're going to redo this sole prop thing. We're also going to go over the regular form. It's a longer form. It's 5 pages, I think. So we're going to go over that to the best of our knowledge. Hopefully Noah, Brode, or somebody else will be able to join us. Yeah, that's the dealio. I don't know. We're tomorrow.
We're back in the mix. You know, these programs, are, especially the Paycheck Protection Program, because it had never existed before a couple months ago, and now it's trying to, is actively being constructed and revised as it's being run out, and that's kind of the structure of this program, and we've got our new guidance, which we'll be kind of implementing and communicating out, which started just last night.
Last night, right? Did you sleep?
Yeah.
I know I did. I had trouble sleeping. I was so excited about
I did. I had trouble sleeping actually, and I didn't know why. And I
it.
woke up this morning and I was like, "Oh, that must have been why." It was.
That's why, because you knew. You had a feeling.
I had a feeling. Someone
Yeah.
on the Treasury website at 2 a.m. someone had posted the forgiveness application, and my brain was telling me to get up and read it.
Read it, man. Read it. It's gonna make your morning. So,
oh dear, is all I can say to that, gentleman. Oh dear, oh dear.
yeah. So, hey, real quick, Alan, can you send a link in the chat? Don't we have a webinar tomorrow for transitioning your business and selling it, or giving it away, or whatever you're doing with it?
Yep. There's a webinar tomorrow for a succession specialist on owner readiness. So if all this pandemic has made you think about maybe thinking about getting your business ready to sell, he's going to talk about ways you can maximize that value and what you can do to help that. So that's tomorrow. There's a link in the chat about how you can register for that. And then over the next, probably next week, we're going to be, or later this week, we'll be announcing a whole series of webinars on Tuesdays and Thursdays around a bunch of topics from cash flow to HR to other things, e-commerce and the like. So things to help people get through and come out the other side of all of this. So,
all right. Well, good stuff. So thank you everybody for joining us. It's 11:59. We're going to go jump off. Have a wonderful Wednesday. We're going to talk to you on Friday, maybe tomorrow. Maybe you're going to join the Spanish speaking at 10:30, then join the transition your business, and then you're going to join the attorney call. And then you're just really going to be really, really sick and tired of us, because then you're going to jump into the Friday call. So then we're going to go into the weekend. Everybody's going to have a great Father's Day, and then we're going to come back and do it all over again. It's going to be fun, amazing, and exciting. Then I'll do the happy dance. I'll see you guys later. Bye-bye.
We all want to see Scott do the happy dance.
Nope.
Bye, everybody.
All right, bye.
Thanks.